Data on the US housing market is showing a surprising increase in homebuyer demand following the election of Donald Trump. In this video, I'm going to analyze the data to see if this increase in homebuyer demand is for real or if we're going to see buyer demand fall back down and home prices drop in 2025. Because according to Redfin, everyone, US pending home sales rose 12% year over year during the 4 weeks ending November 24th, the biggest increase since May 2021. One reason for the outsized increase is that early stage home buying demand, including home tours, boomed in the 2 weeks following the presidential election. Moreover, Bloomberg is reporting that US pending home sales just increased to their highest level since March, indicating that some home buyers have come off the sidelines since the election, and that potentially Donald Trump and his more pro-business, pro-economy attitude could be motivating increased demand in the housing market. And so an interesting question is this a temporary blip on the radar, this increase in demand that was a result of some people who were just waiting for the election to end? Or is it the sign of a more fundamental shift in the housing market where more buyers are going to come in now that the election is over and the Fed has cut interest rates? Well, to answer this question, I looked at data on home buyer sentiment going back all the way to the mid-1970s. So we have almost 50 years of data here, and we're looking at the percentage of Americans that say it's a bad time to buy a house versus the percentage that say it's a good time. And what you can see is that in October 2024, 82% of Americans said it was a bad time to buy a house versus 18% only who said it was a good time. So we have actually historically bad housing market sentiment right now. We've actually never seen this level of pessimism among Americans about buying houses. Even in the early 1980s, when mortgage rates were 18%, only 79% of people said it was a bad time to buy a house then. Today, it's 82%. Most Americans, over 4 out of 5 Americans, still really have no interest in buying a house because the affordability on the market is so poor. The prices are still at record high levels, the mortgage rates are still near 7%, and a lot of Americans can't even qualify for mortgages in this housing market entering 2025. And what concerns me even more is the breakdown in sentiment by age, particularly among younger Americans regarding how they feel about the housing market. Because this University of Michigan sentiment data is broken down actually between age cohorts, income cohorts, education, as well as politics, which we can talk about in a second. But what's really interesting is that the worst homebuyer sentiment index is among those aged 18 to 44. Their index was a 23 out of 100. Whereas the index of those aged over 65 was a 43 out of 100. So neither were good, but those 18 to 44, the millennials and the Gen Zs, feel much worse about buying a house. They don't think it's a good time to buy. And that's the main demographic that you do need to buy, that you do need to actually sustain a housing market and housing market demand in the future. You need the millennials and you need the Gen Zs as first-time buyers to step into the market. So it's concerning that they are so pessimistic about buying a house. And I think they're pessimistic about buying for 2 fundamental reasons. Number one is affordability. With the monthly cost of buying a house skyrocketing all the way up to $2,800 a month in late 2024, including taxes and insurance. That's the average home buyer in America needs to pay $2,800 a month. That's double what it was before the pandemic, and it's triple what it was at the bottom of the last housing crash when the average home buyer payment was $900, everyone. It's gone up by 200% the last 12 years. And so I think most millennials and Gen Zs have grown up seeing that. They've seen how much more the housing costs today, and they either don't want to buy or can't afford to buy. But I think there's another reason, point 2, that we need to talk about, which is why Gen Zs and millennials don't think it's a good time to buy a house. And that's because these generations are much more accepting of renting. Those in their 20s and 30s, a lot of them grew up renting, and they grew up renting in these kind of newer apartment buildings, sometimes luxury apartment buildings, and they like the convenience of renting. And so they're not in any rush to buy, especially with a lot of millennials and Gen Zs delaying plans for family formation, delaying plans to get married and have kids. And so I think this is pointing to there being structural issues in housing market demand going into 2025, suggesting that this blip in early stage home buying demand that's occurred post-election isn't going to be so sustainable. Another interesting thing about this increase in demand after the election is that these are increases coming off very low levels. So you can see on pending home sales from Bloomberg, they're showing that the increase was 2% up to an index level of 77. That's still about 25%, 26% below what it was before the pandemic. And so if you do read one of these news articles talking about a surge in buyer demand, understand that it's really only a surge based on the fact that the existing levels were really, really low. And if you do any type of comparison to a pre-pandemic baseline, you can still see that the buyer demand is in the tank. The same reality exists with mortgage applications to buy a house. We did actually see a little uptick in mortgage apps in the most recent week to an index level of 153. However, this index level is a massive 43% below the same week in 2019. And so this is the number of people going to buy a house with a mortgage, everyone. It's 43% below 2019, 51% below 2020 levels, 48% below 2021, 16% below 2022, and 5% above 2023. So a little bit of a marginal uptick year over year, but still colossally down on mortgage applications to buy a house from more normal levels. And at this point in the video, I want to address a broader problem that I see in the housing market. I think you guys as buyers out there, you're experiencing this problem, and even as investors, you're experiencing it as well. And that's the disconnect between the cost of buying and the cost of renting. Simply put, it is way more expensive to buy a house in America today than it is to rent a house. And that is resulting in a lot of home buyers just sitting on the sidelines, potential first-time buyers, because there's no real incentive to buy when it costs $700 more a month to do it. And I want you guys to really understand this point, because we're taking a look here at the monthly mortgage payment for a buyer, inclusive of taxes and insurance. We talked about how that's $2,800 a month before, but we're comparing it now to the typical monthly rent data from Zillow. And we can see the typical monthly rent is $2,000 a month. So the monthly cost to buy in America is around $750 more than the cost to rent, which is one of the highest buyer premiums that we've seen going back the last 25 years. The last time the buyer premiums were this high was 2006, 2007, before the big crash. Back then, it cost about $600 a month more to buy than rent. Now it costs about $700 more a month to buy than rent. Now look at what happened after the last crash, everyone. After the last crash, it actually became cheaper to buy a house than it did to rent a house. I mean, that's unbelievable. From 2011 all the way to 2020, 2021, it was cheaper to buy than to rent, which is why so many people bought in this period and why there were elevated home sales. So long as this situation exists of cost to buy being higher than cost to rent, I don't think we're going to see a meaningful recovery in housing market demand. And ultimately, where the rubber meets the road on this discussion here is with home prices. What's going to happen to home prices in 2025? Because if you ask some people, they're going to say, well, prices are going to keep going up. If you ask other people, they say, well, prices are going to have to crash. And actually, to kind of settle this debate, I asked you guys what you thought out there about whether prices are going to go up or down in 2024, and there were some pretty interesting results. First thing I did was on my Twitter account ask, in 2025, home prices will go, and 50% of you said down on my Twitter account. 32% said up. 19% of you said not sure. I'm not sure if you guys follow me on Twitter. You should, at NickJurley1. Post there a couple times a week, but we can see that 50% of you think prices are going to go down. Now, I asked the same question on YouTube. 15,000 of you voted. Pretty similar results. 47% of you said prices down, 35% said prices up, 17% said not sure. So it seems like a majority of you either think prices are going to drop or you're not sure. About 1/3 of you think prices are going to go up. This is a pretty representative sample of home buyers, everyone, between my Twitter account with 120,000 followers, my YouTube account with almost 600,000. It seems like a lot of buyers out there are expecting prices to drop next year. And right now, I'm going to tell you some of the states and some of the cities where I think prices are going to drop in 2025 based off the underlying data in the market. And this is the difference here between my channel and other channels, everyone. On most other channels, people just kind of give their opinion on where they think prices are heading. I'm about to give you the cold hard data on the home price forecast trends in your area. Let's get into it. And to do this, we're going to go to Reventure app and we're going to look at a data point called the home price forecast score. This is a data point that ranks from 0 to 100 and tells you the likelihood the prices are either going to go down or up over the next year. And it's these areas in blue that have negative home price forecasts. These are areas where the inventory has grown, the price cuts have grown, the days on the market have grown, the appreciation has softened. So when you see those things occur, it's more of an indication of a buyer's market and declining prices. One interesting market here, and I'm going to talk about 5 or so in the next minute, is Nashville. Nashville is now a 40 out of 100 on this score. You can see it went from being a big seller's market in the pandemic to more of a buyer's market today. And the whole reason why is because the inventory on the market has skyrocketed to its second highest level in 7 years. Meanwhile, the days on the market for houses has also skyrocketed to its highest level in 7 years. So when you see skyrocketing inventory, skyrocketing DOM, that's telling you softening market price is more likely to drop. Another area where we're seeing similar trends, everyone, is Tampa, Florida. Tampa, a 37 out of 100 on the Reventure score. Listings have spiked from 4,000 a couple years ago to over 15,000 today. Meanwhile, the DOM has gone from 44 days a year ago to 73 days today. Major indication of softening in Tampa and a lot of other parts of Florida. Moving on to Texas, we can see in Dallas. Dallas has one of the lowest scores of any metro in America, 39, heavily related to a massive spike in supply. There's now 26,000 homes on the market in DFW, the highest level in at least 7 years. Heading on to the West Coast, we can see a lot of downward price pressure in Colorado. Denver, Colorado Springs have heavy downward price forecasts, as do a lot of places in Arizona. Phoenix is a 45 out of 100. I think that score in Phoenix might be heading down even more in future weeks and months. We can also see negative price forecasts in a lot of areas in Idaho and the Pacific Northwest. And on this version of the map, you can see the home price forecast by state. Interestingly, we have about half the states in America on Reventure app being forecast to go up, half being forecast to go down. Most of the areas forecast to go up are in the Midwest and Northeast. Most of the areas forecast to go down are in the South and Southeast. If you're one of these people who's sitting on the sidelines, or maybe you've been stacking cash and you're not sure, should you pull the trigger on a house, go look at the home price forecast for your area on Reventure app. Go to www.reventure.app, type in your zip code, and see what that forecast is for your area, and then upgrade to a premium membership at a cost of $39 a month. So you can see the price forecast for all of the zip codes in your metro and surrounding metros. And what's interesting is that even in an area like Tampa where prices are dropping, there's still certain pockets of strength where prices are likely to be more stable. So you're going to want to understand where your neighborhood falls, where the areas you're looking at houses fall in terms of this price forecast. Again, this is based on underlying data in these areas related to appreciation, days on the market, inventory, and price cuts. Access it now at www.reventure.app.